Hey there, good afternoon, traders. Welcome to our session. I hope you can hear me. I hope you can see me. If you can, let us know. Welcome to today's Admirals webinar series, where we're going to be talking about Forex trading for beginners, for absolute beginners to the FX markets. If you're watching this here in the room, you're very welcome. It's great to have you here. By all means, you can fire away your questions. If you're watching this later on demand on the Admirals YouTube channel, then be sure to make sure you subscribe to Admirals YouTube channel. If you find it useful, give us a like up. If it's not been helpful for you, you can actually give us a thumbs down. That's absolutely fine. We like all of the feedback. If you've got thoughts or considerations for future topics that you'd like to see us cover, then by all means, just put them in the chat box or put them in the comments box on the YouTube channel. As I said, we're going to talk about Forex trading for beginners. It's we all have to start somewhere, ladies and gentlemen, okay? We all have to start somewhere, right? And it's a case of that's what we're going to focus on today. I'm going to focus on giving you a bit of background around the Forex markets, and also just give you where you can start to sort of focus your time, energy, and resources. So without further ado, let's kick off. Let's switch across to the slides and talk about Forex trading for beginners. So just bear with us. Let's bring this up here. Super. So as I said, I hope you can hear me. Hope you can see me. Hope you can see the slides as well. That'll be a bonus for us all. And here we are, Admirals. Okay, Forex and CFD broker with global presence but local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing the opportunity to engage with markets using both the popular MT4 and MT5 platform. If you have a question about Admirals, please get in touch with your account representative and they'll be very happy to help guide you. You can also follow us on Instagram as well. If you're not doing so already, you can see there, okay, the handle there at Admirals Global. Be sure to look us up, give us a follow. You'll find lots of useful information there, and also hints and tips on when the next of the major videos from myself or my colleagues Marcus and Jens are coming across for you to join in and enjoy. You can also watch us on YouTube, okay, as once again, at Admirals Global. You'll find this particular video and a whole host of other fantastic material on there on the YouTube channel, okay, tons of stuff on there, okay, that you can just spend your upcoming long winter nights, okay, being able to go through to enjoy and effectively raise your knowledge levels about trading markets. So be sure to give us a follow there at Admirals Global. So, what are we going to talk about today? Well, as I said, I appreciate that we always have a broad range of experience here in the room for our events, from complete beginners to, very experienced traders. But today we're going to be focusing primarily just for the purpose of beginners, all right? And we'll be talking about, well, what is the FX market, okay? How do they operate, okay? We'll have a little talk about why central banks and why particular instruments are so important to FX markets. And we'll talk about how does a trader engage with FX markets. And actually what we're going to talk about is I'm just going to go a little bit about what it actually means to basically understand how the FX market operates, how you as a trader would actually sort of look to put on orders to buy and sell in markets. And I'll also give you just a very simple little plan that complete beginners could start with to take away and utilize there. So as I said, you're very welcome. If if you've been trading for a while, it would be fantastic to hear what your experiences have been like. What top tips do you think you would have given yourself? Okay, if you were to look back to yourself at your starting point, what top tips would you actually give to yourself? Okay, or to another trader at a beginning point. It'd be fantastic to hear that, because we all have our own experiences, and it'd be, as I said, it'd be great to share that. So for those who don't know me, my name's Paul. I've traded for many years. I primarily look to trade. My focus goes on FX indices and commodities. I tend to be a trend trader for longer term trades, and I tend to be a mean reversion and reversal trader for shorter intraday trades. But today we'll be mostly focusing on FX, mostly focusing on that in terms of swing and position trades. So as the slide says, over the last 20 years, the foreign exchange markets have become a popular asset class for private retail traders to experience and engage with. However, for complete beginners, it can provide a bewildering array of descriptions, rules, and ways of operating. And so today we're going to shed a little bit of light on FX markets, on actually how to trade, what you actually physically have to do when you're looking to trade FX markets for the benefit of beginners, okay? And as I said at the start, we all have to start somewhere, all right? We all have to start somewhere, including myself. And when I look back at how I started in my exposure to FX markets many years ago, the levels of materials and resources that are available for new traders, it was nothing like it is today. You have an absolute plethora of fantastic, resources that new traders can tap into, like all of the kind of the videos that myself and Marcus and Jens put together on the English side, English sort of speaking webinars for Admirals. There is an absolute ton of material on the Admirals website. That was not a case when I started. It was quite literally having to really work quite hard to ferret out bits of knowledge and information. It was really very much operating the blind. So there's just a superb level of resources and knowledge out there to help traders. And what we'll do is, as I said, we'll just shed a little bit of light on the FX markets for the benefits of complete beginners. And if you've been trading for a while, as I said, this might act as a little handy reminder, okay? And there's nothing wrong in that now and then. So, what is kind of interesting to think about and consider, compared to other asset classes, is that when you're trading foreign exchange, you're effectively trading money, for want of a word. You're effectively trading, money. I'm sure back in the previous life, okay, when you went on holiday, you'd actually go to a travel exchange place and you'd actually physically trade money. Okay, you'd physically trade money. You'd trade your currency, the currency where you're going on holiday. And if you were interested in savvy, you'd sort of keep an eye on what the actual exchange rate differential was. But you were physically trading money. There's for the most part was now, okay, there is nothing physical. It is just literally ones and zeros on a screen, and you are. In many ways, when you're buying a currency, it's kind of like buying a share in a country. Okay, you are literally, you are buying into that country and its economy and its future trajectory. And the exchange rate, okay, the exchange rate is a reflection of the condition of that country's economy compared to other countries' economy, and it's a constant sort of state of flux. And the other interesting thing about trading FX compared to other asset classes is that when you trade in FX, you buy or sell in currency pairs, and each currency is in a tug of war with each other. Okay, you are, when you buy a stock in Amazon, you are literally just buying the stock in Amazon. You get in the old days, you get your paper certificates through the post, okay, and you would have a share in that particular company. Now what you're doing is, you are buying, it's effectively two trades, okay. You're buying one currency and selling the other because each of those currencies is in a tug of war with each other, and you're making a decision, you're making a position, taking a position, putting a trade on, depending upon which one you think will be the kind of the winner and the loser in that particular trade. So when we look at FX markets, and you start to look at it, we've got to start to think, well, what are the most popular traded currencies in the world? And probably some of these shouldn't really be a surprise to you. As you can see there, in terms of by currency, the US dollar is huge, in terms of the most popular traded currencies. And then you can see euro, yen, sterling, Aussie, Swiss franc, Canadian dollar, Kiwi dollar. Okay, and that's that's in terms of traded currencies. But actually, as we go into it, you'll see that number skews itself even more. What you can see is that you've got those kind of 8 most popular traded currencies, with US dollar at the top, then euro, yen, sterling, Aussie, Swiss franc, Canadian dollar, and Kiwi dollar. And those are the three-letter terms you'll see for them, okay, to define them and to describe them when you see them on your charting platform or in actual, in webinars and written pieces, etc. When the number 2 to 8 currencies are traded against the US dollar, this is basically known as trading the majors, okay, and that'll be a little bit important later on when we come to look at our own trading plan. When you're trading between 2 to 8, all right, so if you're trading euro against Canadian dollar or Swiss franc against New Zealand dollar, this starts to become known as the minors, okay? So you've got the majors when you're trading against the US dollar, When those top 8 are trading between each other, that's known as the minors. And if you're trading outside of these pairs, 1 to 8 pairs, well, then you start to get to known as the exotics. If you're trading if you're trading the Russian ruble against the Singaporean dollar, okay, that is known as an exotic, all right? And that becomes more useful information to us as we move on a little bit later to understand that, how we're going to trade and what we're going to focus on. But this is, as I said, is a little bit about building a picture for complete new traders to give you an idea and an insight into the Forex markets. So when you look at the majors for new traders, you'll see like the euro against the US dollar, euro against the United States, and you can see on the far right side, once it's known in like FX speak, okay? So you'll see euro dollar, dollar yen, it's US dollar against Japanese yen, pound dollar, dollar Swiss, dollar loonie, Aussie dollar, and Kiwi dollar, okay? And that's the kind of, the majors, okay? Those sort of, those 7 top currencies traded against the number 1 major currency, the US dollar, and that's how they are portrayed, and that's how you'll hear them called for when you hear FX traders talking about it. So what we can learn, what we can understand from it, is that the dollar is king in FX markets, right? More than 50% of trades in the FX markets involve the US dollar, okay? The dollar is king, okay? It's the big silverback gorilla, okay? So, you want to understand that, you want to know what the US dollar is doing, okay? You really, it's important to sort of take on board what it's actually doing. What I'm going to suggest is for new traders, okay, is that you focus on those majors, okay, those major currencies trading against the US dollar to begin with, okay. As you become more experienced, well, then you might wish to broaden, okay, your kind of a trading portfolio to include things like the minors, euro, yen, sterling, okay, the comdols, okay, Aussie dollar, Kiwi dollar, Canadian dollar, Swiss franc as well. And as I said, there are exotics, Brazil, Brazilian, Mexican peso, okay, etc. But what I would say is, we'll focus on the majors, and that's what I suggest for new traders to where to begin. Okay, it's easy to get overwhelmed. It's easy to trade I think it's something like, I think it might be like about 130 different currencies in the world. There could even be more than that. So it's very easy to get, overwhelmed by that. But what I suggest is just focus. Okay, just focus on those, on the 8 majors. Okay, those trades between them to begin with. And what it says there, as it says, is unlike the stock market, okay, when you buy your shares in Amazon, all right, that trade goes through the central exchange, okay, it'll go through the exchange in America. That's, when you buy that particular share. The FX market, has neither, it's neither a physical location, it's not one, nor a central exchange. It's what's called the interbank market. And it's, it's made up of around about sort of 10 of the top major tier 1 banks in the world. It's known as over-the-counter or OTC, you'll hear it. It runs 24/5, okay? So, it kind of starts at 8 o'clock in the morning, kind of New Zealand time, and then that'll run all the way through till sort of Friday kind of 5 o'clock when the US market closes there on a Friday evening, which for me here in the UK, that's normally between about 9 to 10 o'clock in the evening, okay, depending upon which period of summer, which sort of time period we are in. And it is also seen as the biggest trading market for the world, okay, and so the numbers you'll see come out to talk about how there can be between like $5 to $6 trillion every day traded on the FX market. And this is kind of an interesting thing for us, okay, because the actual foreign exchange market is primarily there, okay, to effectively facilitate international trade, right? It's actually there to facilitate international trade. It is actually not there as a speculator's market. It's there to facilitate international trade, okay, in this wide, huge, global, interconnected economy that we now live in. So it's always worth remembering that, okay? The big players, a lot of the main players operating in the FX market are not doing so, right? Not doing so for profit. They are doing because they will, facilitating international trade, or they are hedging, right? They're hedging their positions based upon what their actual main organizations, purposes within that. So it's always worth just remembering that, okay? It's always worth just remembering that that you are, as a speculator in these markets, you are not the biggest player, okay? You are not the main driver of it. So, we just said that, an awful lot of, over 50% of trades are involved the US dollar. When you look at kind of world FX reserves and see, who is holding what, well, you can see that, over 60%, nearly 2/3, 62%, is held in FX reserves are held in the US dollar. And we'll come on to that in a moment as to why that's interesting. Then you've got pound sterling, Japanese yen, euro dollar, and then there's just 28% held in other currencies. Okay, so there's a huge amount held there in the US dollar. Okay, once again, it's just adding to this story. Okay, that our focus should probably be, for beginners, just to focus on the US dollar. But why is the US dollar so popular? Well, there's a few reasons, but the main reason is the US dollar is the reserve currency of the world, based on what is presently still the largest economy in the world, the United States. What you also have is that as that's part of that, commodities are priced in US dollar, both soft and hard commodities. So price of oil, price of gold, price of silver, corn, wheat, etc. They are also priced in US dollar. So if you want to trade in those commodities, it's important that you actually hold some US dollars on reserve. So hence why we start to see, what was it, 62% of FX reserves are held in the US dollars. Also what you have is debt is also, debt is also very often denominated in US dollar as well. So if you're a country that has, a lot of debt, okay, that, may have had to have a bailout, all right, may have actually taken money from IMF or World Bank, that will probably be denominated in dollars as well. So you're looking to pay it back in US dollars. So that is one of the reasons, well, quite a few of the reasons why, the US dollar is, a most popular traded currency in the world, and that is information that new people to Forex markets should be aware of. So if the US dollar is the #1 most popular currency, and every trade is one currency against the other, then which are the most popular currencies to trade against the US dollar? Well, not unsurprisingly, okay, a lot of that is to do with those other majors that we saw. And you can see there, okay, euro, US dollar, okay, 30% of the trades is basically between the euro and the US dollar. And I think euro US dollar might be the most traded instrument in the world. Okay, that's what I understand. It may have changed, but generally you can see definitely within the FX space it is, and I think actually it is the most traded instrument in the world across the way in terms of that kind of volume. Then you can see the dollar yen, all right, is traded second, pound against US dollar, Aussie dollar, dollar against Canadian, Kiwi dollar. Okay, so actually what you see there is, you can see that, there's Kiwi dollar, dollar CAD, Aussie dollar, pound dollar, dollar yen, euro dollar. That actually makes up, a huge number, huge space of the actual US dollar pairs, that section. Okay. Shubham's asking, can you please provide recording section? Yes, Shubham, all of these webinars are always recorded. What my wonderful assistant Nancy will do is she'll put up a little link later, just showing where you can actually find all the other Admirals webinars, and where this one will also be placed as well. I appreciate, I'm going through a fair few here, because I just want to try and give you as much information as you can. Okay, and what I suggest is, by all means, make sure you go back and watch this, because you might need a couple of watches just to get all of the details and the data that I'm trying to share with you. You're very welcome, Shubham. Okay, great to have you, and thank you for the question. And as if by magic, my wonderful assistant has just put in the chat box, okay, just a link there that can help you with that. Okay, so great, be sure to click on that and add that to your thing, and as I said, subscribe to the Admirals YouTube channel. So you can see there where the vast majority of FX trading is going, and how massive, the majority of it is using the FX, is using the US dollar. My apologies. And that's where we're doing, and it's another reason why I suggest new traders, you might just want to focus on that. Maybe you just want to focus on your own currency wherever you are in the world. I appreciate we have a global audience, all right. You might want to focus on your own currency of trading against the US dollar, but equally you might want to have a look, as I said, at those majors there, okay, and how they look up and set. And yeah, fantastic. My wonderful assistant there. Okay, that's a link to the YouTube channel. There is a wealth, okay, of previous webinars there, of which I'll touch on a little bit later, okay. But there's plenty there to as I said, help pass those long winter nights. Okay, being able to watch all the videos from myself, Marcus, and Jens. So, that's all good. That's all useful information for beginners to get a bit of a big picture understanding. But how do we use that information? Why is it important to us as traders? How do we use that as beginners? Well, what we're interested in as traders is that the most actively traded FX pairs, they have high liquidity. Okay, you can go into depths of understanding, of really fully understanding what liquidity means, but at a very simplistic term, it's more interest usually means it is easier to buy and sell in FX. Okay, for institutions who are operating massive positions, it means it's easier for them to get their position on without the market moving too far for or against them. Okay, but for ourselves as, let's say, private retail traders, it just means if the actively traded pairs are liquid, it means that you should have no issue being able to get your position in and out of those markets. All right. What it also does, and what becomes more useful and interesting to us, okay, as private retail traders, is that higher liquidity equates with lower commission costs. Okay, remember, this is a business. We all we'll have to understand what our cost of business is. It also generally tends to generate good trading conditions. That means we get lower spreads. If you don't know what that is, hang on, we're going to cover that in a couple of slides. It also things like smaller commissions, minimum commissions for rolling over positions overnight, which is what's called swaps, and there might be no or small commissions for opening a trade, and you'll also generally get fast trade execution. So as I said, focusing on these more majors, okay, which are the actively traded pairs, which have all good liquidity, and also kind of smaller costs of doing business, it starts to become a more suitable space for a complete beginner to join Forex trading with, or through even. And what it also means is, if you're focusing on that, is that there is more focus on those currencies. Okay, so if you're a new beginner and you're actually trying to understand what's going on in both markets and FX markets as well, is that those kind of majors, you'll get more analysis and expert opinions. Now, I will also admit that can be a double-edged sword, because sometimes you can get too much information. That sometimes one website tells you should be buying euro dollar, the other one tells you should be selling euro dollar, and when you're a new beginner, that can be a bit overwhelming. You're thinking, who do I follow? Okay, but what, with a bit of experience, you start to sort of be able to create your own analysis and be able to take on board different opinions and use it to form your own opinion, because ultimately you're trading your own opinion. That also means that there'll be things like more forecasts, trading signals created and published for the most popular pairs. There's more focused coverage of events in like the news and the media relating to those pairs. And you'll also find there's more trading guides and education focused on these pairs. And what you'll do, just even as an example for here us at Admirals, if you look at the link for the YouTube channel, you'll find that I've done recently particular sessions on trading US dollar, sessions on trading the pound against the US dollar, just on sort of a couple of them on trading FX pairs. Okay, so there is, as I said, there's more trading guides and education focused on these major pairs. So there's as I said, there is a wealth of knowledge out there that you can tap into to help you expand your own education and knowledge and insight into the FX market as a whole, but also into these kind of what I'd call the sort of trading the US dollar majors. So what is also useful to understand is to understand the timing, the geography. As I said, I appreciate that we do have we have a global audience who come and join us, and it's fabulous to see people from literally from the four corners of the world. The world is round, okay, so it doesn't have four corners, but you get the gist, you get my understanding, okay, that invariably we have people coming from all around the globe, okay, joining us for our particular sessions. When it comes to the FX market, it would still be said that the European session, the London session in particular, is still the main trading session for the FX market. So you're looking, as I look at it as from here in the UK, in London, you're really looking from when Frankfurt opens at 7 o'clock in the morning UK time. Just be sure to be able to relate that to wherever you are in the world joining us, through till about 4 p.m. Okay, it would be the sort of European session, and within that, really you're looking at the you're really looking for basically the kind of that trade in the European session, in the early session. Okay, so it says the most popular time for traders, that should actually be, it should be basically, that will be a case of really from about 7 in the morning till about 10 in the morning London time. All right, that's what we'll be looking at there. But equally, there is also, an interest in the afternoon session between about 3 till 4, because then you have the overlap of the European and the US session. Okay, and there's normally about a 2.5 hour window there. Okay, of overlap between the US and European session. It's useful knowledge for traders. I personally, and I can only speak for myself here with this experience, is I have found it easier to trade FX in the mornings in the London session than in the afternoon US session. I'm not saying you can't do it, but because sometimes you might have actually both the Europeans and the US fighting it out, which might mean that instead of getting a nice clear trend for you to trade, the market could actually be more choppy, more volatile. Okay, so my personal experience for intraday trading is that the morning European session tends to be better. But that is, that's my experience. Okay, other people may differ with that. And as you can see here, okay, let's just get the old drawing tool here. We're kicking off with from London here. Okay, London there in sort of 7 o'clock. There is that overlap there, and then what we have is the kind of overnight Sydney and the Tokyo session. As the Tokyo session and the Asian session comes to an end, okay, between about 6 to 7, in the morning here in UK time, that's when the European into the London session open. So as I was saying, it's kind of like a 24-hour market that we see, okay, and that provides opportunity for wherever you are in the world. Okay, even though I said the London session is the prime session, that still means that there will be if the people here trading between who are living in Australia and New Zealand, they might be trading the Aussie and the New Zealand dollars overnight there, because that's what's local to them at the time. So it does provide wide opportunity for you within these FX markets. So just for the complete beginners, if you don't really understand the lingo, if you hear me talking about buys, okay, if you hear me talking about going long, that is effectively I'm buying that particular instrument. If you hear me saying that we'll be going short, that's because we're selling that. All right, and remember that because we're in FX, you have two parts to the trade, which is what we're going to come on to here in a moment. So when you look at here, okay, is what we're looking at is when you see a quote, and this is a quote for the GBP against the US dollar, the pound against the US dollar, 151.25. Okay, when buying the exchange rate, okay, tells you how much you have to pay in the unit of the quote currency to buy 1 unit of the base currency. Okay, so the first three, okay, that is the base currency. The second part is the quote currency. So in that particular case, you would need to pay $1.51 to basically buy 1 British pound sterling. Okay, so the quote is always telling you how much in the secondary currency, the quote currency, do you need to pay to buy one of the base currency there. Okay, so it's just useful for completely new traders to understand that and to see that when they understand what that means. So, when you start to think about, other reasons, why do people trade FX? What is it about it that kind of gets them going? As we said, part of it is because it's liquid, all right? The amount of buying and selling volume happening at any given time is high, and that makes it easy for you to get your trade on and off. And as I said, liquidity is important because it determines how easily price can change over a given time. And that, as you trade in bigger sizes, as you go down your trading career, that actually becomes becomes very important to you. What is also useful, okay, and what is also reasons for trading FX markets is it responds well to technical analysis. Okay, charts work well with FX markets. Okay, like all markets, there are times and periods where it works better than others, but as a general rule, it works well. It responds well to technical analysis. One of the other reasons is, because of the size of those FX markets, it's difficult for a market to be truly manipulated. That's not to say they aren't at times. That's not to say that central banks may not try to manipulate it, and we have had experiences of that. But as I said, it's difficult for a market to be truly manipulated for a long time, because that market is absolutely so huge. Along with that, well, then what we also get are that the spreads are tight, as we said earlier. Okay, your cost of doing business is less, and that basically means it is also, it's easier to keep on top of the news, sort of. And what do I mean by that? Well, I have clients who trade lots of stocks, and they might have to keep on top of about 80 different stocks. Okay, so all the news that comes out for all those individual stocks, there's a huge, it's a huge range of information that a trader needs to keep on top of. Whereas if you're just focusing on, the US dollar against, its majors, that means, we're cutting it down to sort of 7 or 8 currencies, okay, 7 or 8 charts of currencies that we're going to focus on, and we're looking at bigger picture details. So it just makes it a little bit easier to keep on top of the news, to understand what the actual situation is within that particular country, within that particular currency. And so, I find it for myself, I just find it easier because I find that trying to keep on top of what might be hundreds of different stocks, it just, I find it would be too much. It's overwhelming, and that suits me. Other people will differ greatly, and that's fine. That's what makes markets. Welcome to trading. But that's, when it comes to FX trading, those are areas that I would look at, or I would consider important. So if we look at, the actual trading, okay, actually sort of the function of trading, the operations of trading, when you get to look to sort of, to trade a foreign exchange, to trade, FX, well, what you need to understand is that you'll see that FX quotes are quoted in 2 prices, the bid and the ask. You'll hear traders talk about, all right? The bid is lower than the ask. The bid is the price at which your broker is willing to buy the base currency from you. The bid is the best available price at which you, the trader, will sell to the market. So when you hear, just bang, that is, the bid is the best available price at which you, the trader, will sell to the market, okay? The bid, it's lower than the ask price. All right, I'm going to come on over the next couple of slides. So when you see, the sell button, okay, or when you hear traders bidding up, okay, this is basically what they're looking at, and what they're trying to understand is that basically, as I said, the bid is the price at which your broker is willing to buy the base currency. Okay, think about that. Remember, there is 2 trades to an FX trade, but there's also, there's you trading, with your broker. Okay, you might want to buy that currency there, want to sell it. Okay, that is invariably what you're trying to understand, as well as you improve and understand the mechanics of the FX market better. And on the flip side, the ask is higher than the bid. All right, the ask is the price at which your broker will sell the base currency. The ask is the best available price at which you, the trader, will buy from the market. And you'll hear sometimes called the offer, the offer price. Okay, that's called it. So you'll hear sometimes it called, the bid and ask, the bid and offer price. You'll see it as like the kind of sell and the buy buttons. Okay, when you break it down, invariably, if you're looking, if you're looking on the MT4, MT5 platforms, you're going to be looking to hit the buy button. Okay, if you want to basically to go long, to actually take a long position, that is US dollar against Canadian dollar. And on the flip side of that, you're hitting the sell button if you basically are thinking the price is going to go down. Okay, price of the US dollar will go down and Canadian dollar will strengthen, and that's what you'll be looking to. That's what you'll be looking to basically to hit the punch on your trading platform. And what is important for traders to know, and understand, is that the difference between the bid price and the ask price is the spread. All right, so is your dollar, your base currency is 1.1051. The counter currency, okay, the ask price is 1.1053. The difference between that is, as you can see there, is 2 pips. Okay, it's 2 pips, and that is the spread. Okay, That is the spread. That is what the the broker takes. That's how the broker stays in business, because invariably, the spread is what they take. Is what they take for basically facilitating the ability for you to actually engage with and trade with markets as a private retail trader. So it's always worth understanding when you know what the spread is. Okay, it's to see it, to see how that is. Invariably, it's another reason is that what you'll find, as I think I said earlier, is that the spreads on the dollar major, the major pairs, okay, they tend to be much tighter than on the minors and the exotics. So it's you think about it as it's a cost of doing business as you increase in size, and so being able to trade the instruments that have the tightest spreads can be a thing that can help you in your own trading. So what also happens is in FX markets is that in the FX you can't just go in to the market and just buy €1, okay, or $1 or £1, okay, when you're trading through a broker on our charting platform. What happens is that you're trading in lots, okay, lots. Sometimes you'll hear a contract called contract. So when you buy a what's called a micro, okay, which is effectively that's sort of 0.01, okay, on your trading platform, you're actually buying 1,000 units of that currency. A mini lot, okay, is 10,000 units of that currency, and a standard lot is 100,000 units of that particular currency that you are trading. That's what you're actually looking to. Okay, so as I said, and then you'll start to understand micros, minis and standards, but also nanos, which are even smaller there. Okay, but that's a different story for a different day. But they are there available for you. So the thing is, most traders can't afford to just wander into the FX market and buy $100,000. So this is where they use margin. Okay, this is where they use margin trading, which is effectively trading with borrowed capital, and that borrowed capital comes from your broker. That allows you to buy relatively large positions, but it also allows you to get yourself into trouble if you don't really understand what you're doing. Okay, so take a bit of time to understand margin and leverage, and most importantly, take a little bit of time to understand effectively the risk management, okay, and how the importance of risk management. You'll hear me, having gone on all of my webinars here, the importance of it. Have a look in the YouTube channels. You will find quite a few videos on managing risk, okay, within your trading, and that becomes the thing. Yeah, nice touch, Darshan. Yeah, you're clearly sharp and alert, okay, unlike my former assistant. So it's a case of doing that well, okay, just basically understanding risk management, and it allows you to that's what allows you to operate with margin. We'll come back to margin leverage in a moment, but it is interesting to understand, okay, when you hear me talk about prices moved in pips, okay, what we're looking for, what actually is that? Well, pip in foreign exchange is the unit of measurement that explains the change in value between two currencies. And a pip is usually the last decimal place of a price quote. Now, most FX pairs will go out to 4 decimal places. So I'll draw it to here. Even though it might have 5 decimal digits there, actually most traders will focus on going out to the 4th. Apart from the Japanese yen pairs, the yen pairs only tend to go out to 2 decimal places. But when you see that, let's say your dollar quote there, 115.38, the 8 is 8 pips, 38 pips, 500, okay, is the 5, 1 is 1,000 pips, and the 1, okay, the front of it, okay, what would be the $1 would be 10,000, the equivalent of 10,000 pips. That's kind of nice to know, but really for a new trader, you just want to focus, okay, on that effectively, the kind of down to that 4th decimal places. That's where most you're going to be looking at where to put your trades on, at this sort of kind of the 8th pip level, okay, where it says on the 4th decimal or the 2nd decimal when we're looking at Japanese yen pairs. So we talked a little bit about margin. You have to understand, okay, your margin and leverage. What you have to think about is, leverage is like a loan from the bank, okay? Think of it like, it's a bit like the mortgage on a house, okay? If you buy a house and you have to put a mortgage down, that's, there's leverage. The margin is your deposit, okay, and that's what you have to do. Your brokers will tend to specify how much margin is required per lot or per particular instrument. Standard for FX these days is 30 to 1 for FX these. It used to be 200 to 1, 500 to 1, okay, which lots of traders liked, but the problem was a lot of those traders had no understanding of risk management whatsoever, no understanding of it at all, and it got them into trouble. Remember what I was saying, you need to understand your margin and leverage requirements, okay, otherwise you can get yourself into trouble. Leverage and margin, leverage in particular, it's a double-edged sword, okay. When you understand how to utilize it, when you understand how to manage risk, it is a tool that helps you trade. If you don't understand it, okay, then it's a tool that can actually cause you challenges and problems with your trading. So, as I said, understanding margin and leverage, okay, and how they operate is very key as a new trader in the FX market. So it's important for you to actually understand your orders, okay. Actually, how am I gonna place an order? Or what do I do? Well, you'll see on the MetaTrader platforms up in the top left of your charts, you do have the ability. Let's just move myself out of the way here, okay. Bang. We do have the ability to, you actually have the ability to set up and just have what they call one-tick trading, okay. Just literal one tap trading, and you're able the ability to basically buy or sell based on just hitting those blue red buttons. But you also have the ability to do is to place a market order, okay, all right, and a market order is an order to buy or sell at the best available price, okay. That's the best available price from the market and the broker. What you have to realize is that, when there are periods where it's volatile, okay, around things like news announcements, the price you want to get might not be the price you get filled at, because those markets are volatile. They're moving very quickly in all sorts of directions. So a market order is literally you punching the button, okay, and just telling the broker, get me into the market, or perhaps get me out of the market, and invariably that has consequences when you're doing that in a particularly volatile particular trading style or trading environment. Whereas what you can also do is you can place orders on your platforms, and so you'll hear traders talk about limit entry orders, okay. For example, a limit entry order is where you have an order to buy below the current market price, or an order to sell above the current market price at a certain price. And this is where you'd be utilizing well, in fact, you've got the MetaTrader platforms, but also the Stereo Trader. And you also have the Admirals Supreme Edition, which have the ability to sort of effectively set these limit entry orders. You're buying below the market, okay, or you're literally selling above the market at a certain price. And on the other side of limit orders, you might have a stop entry order, okay. Many people will hear stop losses, but you can also have stop entry orders. It's almost like, stop the market, I want to get on. And this is where you're going to have a buy above the market, or you're going to have a sell below the market at a certain price. This allows you the opportunity to effectively place an order in the market, so that as price trades through it, that basically triggers you into the market, at the particular level that you wished for. And what's also, as I said, you can have stop entry orders, but you'll also want a stop loss order, okay? An order that's preventing additional losses if price goes against you. If your trade plan doesn't work out, well, then invariably what you'll have is, in a long position, you'll have a sell stop order underneath your trade entry. And if you're going short, if you're selling an instrument, you'd use a buy stop order to sit above the sort of your trade entry order, so that, as it says, if your trade plan doesn't work out, if the trade direction changes, well, then invariably what will happen is that will take you out of the market to prevent any additional losses. And it's important for new traders that, as I said, you understand managing risk, and that effectively you also always use stop orders to make sure that you just stop yourself from getting into any real trouble. So, as a little trading plan for beginners, what I suggest here, and this is something I take a screenshot of this, or come back and watch the download when it's in the YouTube channel, is that just have a simple starting plan, right? Go onto your MetaTrader 4, MetaTrader 5 platform, look at how to set up a profile for the US dollar. I've just taken a snapshot there. That's one of my profiles on the US dollar. And what I've done there, okay, and that US dollar is effectively it's me against the majors. Now let me just me with the majors. Let me just draw in my tool here. So I have the dollar index here, okay, which is a chart which is just demonstrating the dollar index. The dollar index is basically the US dollar against a basket of currencies, and it gives you an idea of dollar strength, dollar weakness. Remember what I was saying? The dollar is the big boy and stuff, and so we want to be able to sort of understand what the dollar is doing. But I have also those majors, okay. So you can see I've got Aussie dollar, pound dollar, euro dollar, dollar Swiss franc, dollar Japanese yen, dollar Canadian dollar, Kiwi dollar. And then I think I've got these all on the 4-hour chart. Okay, now what I normally suggest is, as I say, set up a profile on MT4 or MT5 of that. Identify levels of support and resistance from the daily chart. Okay, just go onto the daily chart if you're a new trader. Draw in levels of support and resistance. If you don't know what levels of support and resistance are, there's plenty of videos in the webinar archive talk all about that. And then look for correlated trends within the US dollar major. So when we start to see particular trends evolving, okay, where we might see the US dollar is very strong, or maybe the US dollar is particularly weak. What we're looking to do is, if there is a US dollar trend, well, then what we want to do is we want to trade in the direction of that trend. Okay, we want to trade in the direction of a strong US dollar trend. If there isn't a strong US dollar trend, either to the long side or the short side, well, then actually you probably want to just sit on your hands, as market's probably range bound or it's transitioning to its new trend. If you have identified trading in the direction of the strong US trend, well, then you can use either either a breakout tactic or a pullback tactic for your entry. If you don't know what they are, once again, if you go into the webinar archive, there's a few videos in there specifically that go into various different types of trading tactics that would allow you to employ and operate. I suggest you can use price action or candlesticks for your actual triggers once you've identified your breakouts or your pullbacks in those trends. Once again, there are lots of videos on those webinar archives that you can rely on. And as always, just ensure you manage risk. Okay, we've always talked here about just making sure that you only risk 1% of your trade on an account, and that you never trade without stop loss. And if you do those two things, okay, that will actually help you just to manage risk as you start off in your own particular sort of trading FX journey. Just go to those. So, just a couple of final points to finish off is, well, how do we use that as a trader? As I said, new traders should focus on trading the majors. Focus on trading the majors to begin with. Okay? There's lots of liquidity. There's usually enough volatility to identify some trades. You've got tighter spreads, which means your cost of business is less. And there's plenty of research, okay, upon them for you to find out what's going on. Now, effectively, that will make you a US dollar trader. And that's okay as a starting position. It is okay. The number one currency. Okay, it is the big daddy. We've shown some of the data and statistics to confirm that. If you can understand what's going on with the US dollar and you're able to trade that, well, then after that you have the experience to trade pretty much some of the minors, maybe even some of the exotics, depending upon where you are in the world. But being a US dollar trader, trading the majors means it's easier to follow the formal news. Okay, when it's coming out, there's plenty of research on the US dollar for you to study. And it makes it easier for you to avoid overwhelm. You're not trying to, chase hundreds of different stocks. Okay, you're just looking to focus on, what is the US dollar doing and how is it trading against those other major currencies. And it's a good starting place for you to begin with, without getting yourself overwhelmed. So, in conclusion, ladies and gentlemen, the FX market has become a popular trading asset class for private retail traders over the last 15 to 20 years. You have to remember that you are trading money, okay? That's what you're actually trading, okay? There's nothing really physical about it. Think about it like buying or selling a share in a country. To begin with, it's best to focus on the majors, all right? These are the major currencies trading against the US dollar. The US dollar is the main driver of FX trades, okay? So if you're on top of the US dollar, it puts you in a good place to be able to trade those majors. And if you're looking for correlated trends, you're actually looking to see when there is, effectively a strong US dollar trend or a weak US dollar trend, which can be, is just as tradable if you want to go buy, if you want to be a buyer, if you want to go long, or if you want to go short. So don't forget, ladies and gentlemen, join us next time. Okay, join us on Friday. You've got my colleague Jens, who's going to talk about why stock traders use VWAP in their day trading. including what's the VWAP, how's it calculated, examples of the VWAP in the real world, and which aggregation should I use when trading the VWAP and why. That is 2 o'clock London time, Friday, 15th of October. Check your inbox for the webinar link, or head over to the website, okay, and register, and you'll be sent all of the particular details. If you want to get in touch with us, you can do. You can see that there is our email address there, global@admiralmarkets.com, if you've got any particular questions or thoughts. Super. So there you go, ladies. Unfortunately, we're kind of run out of time now. I just want to try and get as much information across to you as for those of you who are just completely new to beginning to trade FX market. It's just, as always, I hope you found that useful. I hope that's given you a bit of insight if you're a completely new beginner to FX. Don't worry, okay? No need to be overwhelmed. We all had to start somewhere, okay? There is a plethora of resources and information that is out there to help you. This is just giving you a little bit of a start of an insight. There are lots of videos there on the YouTube Admirals webinar archive, okay? All about managing risk, about understanding trends, okay? About trading FX, about trading breakouts and pullbacks, understanding different types of candlestick triggers. There's all there. There plenty of information to help you make your journey, okay, into trading FX just a little bit easier, a little bit gentler on yourself. As always, I wish you the very best of success in your own trading journey, ladies and gentlemen. I look forward to speaking to you soon. And until then, trade well, everybody. Cheers.